Back in your life, ladies and gentlemen, crypto market portfolio breakdown. That's what's on the menu today, Friday, last time for the week. I want to break down my positions in the cryptocurrency market. Let's put it this way. It's been pretty stagnant over the last 10 days, right? There was almost nothing to write home about. And we're sitting here with these bearish positions, right? Having this bearish conviction on the market. But for the last 10 days, there was not much, like I said, not much going on. Nevertheless, price action all across the board remain in a bearish looking situation. I mean, still under, below key level resistance. And let's take a look. We'll start with the chain link. You can see here, I mean, the chain link had been jeopardizing our main point of reference, 14.45, closed above a couple of days ago, but immediately closed back below. So our stop loss level hadn't been triggered. Obviously, price action came pretty close, but not too close. And now it looks like it's sliding back below 1445, so that's a good sign. I want to show you how it looks like from the weekly perspective. This is the key resistance here, 1444. If it would have been successfully crossing over, that's game over for us, right? We would be running for the exit and potentially even flipping over later down the road. But I believe price action is still missing a touchdown with 1158, and I feel like it's on its way to accomplish that touchdown. 1158.20, it's a massive key support level. Take a look at the monthly chart. Price action coming off the top, 2632 back in the day, and it's making its way towards the lower section, and it has to make contact with 1158.20, which is why we're so adamant about this bearish campaign. All right, so that's the chain link. Let's talk about the Bitcoin. Bitcoin also gave us some problem, gave us some trouble here by breaking above 84,440. But I felt like it was going to be temporary, and it didn't really get too close to the stop loss level, which you can see is not too far away. But it was able to slide back below yesterday with the daily close confirmation. On the weekly note, take a look. Very similar to the chain link, right? Getting rejection off of that same trigger level. In this case, the major key resistance of 84,440 was a big support level. Now looks like it's putting that resistance that we're looking for, right? So from that point forward, I see continuation of this downside trajectory to the first Fibonacci 38.2, which haven't been touched yet, right? Price came pretty close, but it didn't really solidify a touchdown. I think it's going to be, price action is going to make solid contact with 38.2, and later down the road, who knows? Maybe we'll continue to the 50% Fibonacci, 62,625. And potentially it can go even to the next one, 61.8% Fibonacci correction, 51,680. And even last line of defense correction by definition, 76.4 at 37,850. That's the downside potential. Looks like this from the monthly perspective. By the way, it's an interesting Elliott wave cycle here. Take a close look. You remember the move leading to 20,000 back in 2017? Think about it. That's going to be wave number one, right? A classic Elliott wave cycle. Impulse wave one, right? Then the technical correction all the way to the bottom of, I think it was like 4,500 or something. That would be the second wave, corrective wave, right? And then third impulse wave, we remember that all the way up to 63,000. That's wave number 3, right? And then a big correction all the way down to 17,000. That's the fourth corrective wave. And then the last one, fifth impulse wave, all the way to 110 $1,000. So yeah, we're basically looking over a cliff if you think about it, right? And from the Elliott wave perspective, we can go much lower. Hence these Fibonacci levels to define the downside potential as far as downside capacity, right? So yeah, interesting situation. We're short right now on the Bitcoin. We've been short for quite a while, and you can see we're actually in a loss right now. But if price will continue on this downside momentum, we'll actually get even more aggressive and throw in the third trade. Right now 2 trades are in. Bitcoin Cash, is this really the moment of truth? We've been waiting for this breakdown forever. I mean, that's how it felt, right? Because we started off early when price action for the first time closed below 332.5. We got in, but it was a false breakdown. We fell for it. Timing was off, and price action took us for a roller coaster and actually got pretty close to trigger us out with the stop loss level, right? You can see this is still the original stop loss level around 362.5, I believe. But you can see what happened over the last 7 days. It was such that was nasty. Price action kept testing 332.5, but couldn't really break through. Maybe today, I don't want to jump the gun here, but maybe today is the day that we're finally going to see a breakdown. I'm pretty hyped up about it, pretty excited. Let's see how it goes. All eyes are on today's session. We need to close negatively. We need to close below 332.5. That will give us the confidence to fire off another trade, the third one. All right, these are around break-even point. These are the 3 positions we have, but there's a 4th one coming, Ripple. Here we just need price action to slide below 235.75, close at least a daily session below that level, and we're gonna be pulling the trigger here, right? 4th position, short of course on the Ripple. We got an obstacle at 213.50. We might use it as profit taken spot. We might take some profit off the table at that point. But the idea is to fire off the first trade once it breaks below 235.75, and then get really aggressive once it slides below 213.50, because the downside potential is quite big. We're talking about 170.65 as our primary target and final destination. That's a long way to go. This is how it looks like from the weekly perspective. Also very interesting because you can see how that neckline, right, is a beautiful head and shoulders pattern, right? Left shoulder, big head, right shoulder, breaking down the neckline, mind you, and then coming back to test that neckline from below. This is beautiful technical stuff, right? Take a look at that pullback this week, right off what? Off that neckline. There's nothing else going on there. Now we needed to slide below 235.75, and then I believe price action is going to start building up some serious negative momentum. And I think it's going to take the previous major low from 176.35, right, back in early February. And then I think it will also make contact with 170.65. That's a Fibonacci projection. 123.6 taking off the previous opposite move from bottom all the way to top. So that's next in line. That's literally my top favorite, pending trading opportunity, if you will, the Ripple. But that's pretty much it, right? 3 active positions right now. Looking, eyeballing the next one, Ripple, for a 4th position. But that's what we got. Hope you enjoyed that video, guys. I want to wish you a great weekend. We're going to be back on Monday, same time, same place. Take care.